You could go back to the 1980s and you lived in this dull up-down range, just like silver's been in for 50 years. And that was its reality. And then when you came out of that reality, see the red ellipse? You went from 1200 to 3600 in a handful of months. And by the way, this is not coincident with that copper move. This is a year later. Okay. So it wasn't at the same time. So it was peculiar to lead. But it went into a new reality. Oh, yeah, it had a sharp sell-off after that. That's not the issue. The issue is, but look at the new reality that prevailed since then. Double to triple the price of the old reality.
Yeah.
If silver did this, you could go like the $200+ and then level off into a new reality that's, let's say, 100 to 250 or something.
Yeah.
Okay.
Yeah.
So what we're arguing in answer to his question, there are so many fundamentals out there that are huge involving the failure of fiat currencies in terms of distorting reality, creating monetary inflation, and therefore price inflation of assets like lead, price. I could have shown you a bread price chart or a beef price chart. Look the same as this. A new reality, all distorted by the money unit that you showed, the M2 chart. Silver has not done so. We're arguing its time is now, and it is likely to do it very rapidly in a way that just jolts people. So if you're not already there, don't come back in 6 months. Okay? It's not the time to be joining. You were going into a new price reality, and I think likely fiat currencies will be questioned by large governments in this next debt crisis, to where are already some major governments around the world are pondering seriously moving to gold-backed currencies. We know that. And the Western world, and Japan included, could be the laggards in suddenly realizing, hey, this 100-year game hasn't been working. We need to get something more stable. But you got to go through a crisis sometimes to create that change in thought. And I think gold and silver know that's coming.
Yeah, the paradigm shift. Leveraged wants to know, he's talking a lot about how, I hear a lot about how the price of silver is wrong, and he's asking, is there any other asset on the planet that is priced as wrong as silver?
No, not that I could think of right now. No, even the price of bread or beef. Go to the Federal Reserve site, type in price of bread, price of beef, 1 pound of beef. They'll show you a chart just like those. And then get an M2 chart and look at it. And then go back and calculate, let's say 25 years ago where M2 was and where it is now. Do the math and look at bread, look at beef, look at the copper, look at the lead. Silver's lagged that. I mean, if silver were $50 in 1980 and $50 in 2011, which is still a long time ago, a decade and a half, okay? The decay in the money unit is like 90% doubling in the quantity of money every decade, okay? Silver's way lagged to that reality, and it has the other virtue. Yes, it's industrial, but it primarily moves as a money unit. It has been money for 3,000 years as well. And I think there's a new awakening among people who are watching gold saying, silver's also a monetary metal. Go back 3,000 years. In fact, it was a monetary metal in the U.S. one time, okay? A new reality's coming. And silver has definitely made a mistake. And I think when it blows its cork, it's going to blow its cork. But if it doesn't work this time, then you've got one narrow place to put it. And I think what's going to happen is this crisis that we're about to face, that gold knows is coming, is likely to put gold and silver at new reality levels that's the new reality. In other words, you're not going to go there and collapse back down to $200 gold or $1,000 gold. And that's when we need to look at some of the charts we got. I sent you some log scale of gold and silver.
Yes, sir. And Johnny on the spot, share screen, log scale.
Yeah.
Okay. You can see gold monthly ratio scale since 1975?
Yeah. This is a logarithmic scale ratio. In other words, you go back to 50 years, okay? And the chart below is 50 years of history of silver. Now, look at the gold. It's been massive upwave ratio-wise. It was an 8-fold move from the 76 low to the 1980 high, 8-fold gain. Then you went into a plateaued region for decade plus, 2 decades. Mm-hmm. Then you had another surge, also an 8-fold move from the 2001 low to the 2011 high. Again, 8 times gain from bear low to bull high. Different span in time, but the same dimension. Our bear low, last one was at 1,050 price level in the year 2015. We're only 4-fold move. If we have another 8-fold move, and we certainly have the fundamentals to justify it, gold's going to be over $8,000 an ounce just to replicate the dimensions of those 2 prior moves. Yeah. But also, the main point here, though, is look at it's been gaining. Big legs, range. Big leg, range. Look at the silver chart below. The other monetary metal. And by the way, silver does not move with the commodity complex. Its correlation is directly to gold. The only problem is silver will sometimes outperform gold, but overall, as you can see, it has underperformed gold in the sense that we're only just now moving up out of the 50-year range, whereas gold's done it twice. Okay, there is no range.
Yeah.
Only now on the logarithmic scale is silver now saying, hey, I'm out of here. Okay, well, there's a key thing here. We've been going up in silver for a couple of years. And there's one thing we've identified at MSA that, everybody can look at a momentum chart or a silver price chart and say, oh, it's a bull trend. No big deal. We know that. It's been underway for a couple of years here, especially since 2022, late 2022, when both monetary metals had a pullback. Since then, it's been up, and beating the S&P during that time, by the way. But something happened in the late phase of that 1979 to 80 move, where you went vertical. And also in that bull trend that had already been going up since 2001 through 2011, something happened in the final 6 months or so of that move where suddenly silver just went vertical in a matter of a handful of months, that little part right there. And also in 79 to 80, it went vertical for the last 6 months of that move. I mean, it went, a buck here, and all of a sudden it went from like under $20 to $50 in 6 months.
Yeah.
In the case of 2010, it was in late 2010, something happened there, and we'll show that in a little while, that said, hey, I'm going to go vertical. We're about to have the same situation now that occurred in those two late trend phases where silver went off the page in terms of multiples. In fact, if you analyze the final 6 months or so, the final handful of months of both of those bull trends, and look at the ratio move in price, if we engage in the same way we did then, the next leg up in silver is going to carry you well over 100, or it's going to carry you, if we match the 79 final 6 month dimension move, over 200. And we're going to do it in several quarters. And there's a key factor we're looking at that will signal the onset of that.
You see, there are moments in market history where the entire perception of value flips. When people suddenly realize that the money unit itself, the dollar, the euro, the yen, is what's being distorted, they begin repricing everything. That's when commodities, assets, and tangible stores of value surge. We've seen it before with real estate, equities, and now increasingly with metals. But silver, for all its history as a monetary metal, has lagged behind the move. In 1980, it hit $50. In 2011, it hit 50 again. But think about what's happened to the money supply since then. Doubled, tripled, quadrupled. By all logic, silver should already be north of $100 just to keep pace with monetary debasement. It isn't, and that's exactly why I think its move will be sharp, fast, and shocking when it comes. Gold has already done its job. It's been signaling for years that confidence in fiat systems is fading. But silver is the forgotten twin, still waiting for recognition. And when it wakes up, it tends to outperform gold dramatically. Silver has always been the more emotional metal. It's smaller, thinner, more volatile, and more explosive. In the final phases of a precious metals bull run, silver often goes parabolic, catching up to decades of underperformance in a matter of months. If you look back, both in 1979 to 80, and again in 2010 to 11, the final 6 months of those bull markets accounted for most of the entire move. Silver went vertical. I believe we're on the cusp of that same pattern now. Why is this happening? The fundamentals are there, plain and simple. You've got governments drowning in debt, currencies losing purchasing power, and central banks trapped between inflation and insolvency. You've got industrial demand for silver exploding from solar panels, electric vehicles, and high-tech manufacturing, all of which consume more silver than current mining can supply. You've got global inventories being drained, with visible stockpiles near multi-decade lows. Meanwhile, monetary investors are just starting to wake up to the idea that silver is not only an industrial metal, but also real money. Money that's been used for over 3,000 years. It's like discovering that the poor man's gold is actually the most undervalued asset on the planet. I often talk about the silver to gold ratio, because it's one of the clearest indicators of where we are in the cycle. Historically, in major bull markets, silver trades at about 2 or 3% of gold's price. Right now, it's barely over 1%. That tells me silver is due to outperform dramatically. Once that ratio begins to move, it triggers a chain reaction. Silver starts to rise faster than gold. Investors take notice. Then the mainstream media starts to talk about it. And suddenly, you've got the beginnings of a feeding frenzy. It's not a question of if, but when. What makes this setup even more striking is that momentum, on the charts and in sentiment, is turning before price. This is exactly what happened before silver's last 2 massive breakouts. Momentum leads, price follows. You can already see the shift in behavior among long-term investors, industrial users, and even central banks in emerging markets who are adding to their reserves quietly. These are the tremors that precede an earthquake. Now let's put some numbers to this. If gold goes to $8,000, which it easily could, based on previous cycles, and silver returns to just 2% of gold's price, that gives you a silver target of about $160. If silver overshoots to 3%, that's $240. And remember, that's just mathematics. It's not hype. Silver has done this kind of percentage move twice before in modern history. There's no reason it can't do it again, especially given the current debt and currency backdrop. The underlying story here isn't just about silver or gold. It's about money itself. Fiat currencies have distorted everything from food prices to housing, from wages to savings. If you look at charts of bread, beef, copper, or energy, they've all gone into new realities. Permanent new levels that reflect the declining value of money. Silver is the last holdout. It hasn't been repriced yet, but it will be. And when it happens, it won't creep higher. It'll explode, re-anchor itself, and never look back. The $50 ceiling everyone talks about will become the new floor. The takeaway is simple. We are leaving the old world of silver behind. The decades of sideways trading, the false starts, the manipulations, all of that is ending. We are moving into a new environment where silver's price will reflect not just industrial demand, but monetary necessity. Governments are questioning fiat. Nations are discussing gold-backed settlement systems. Currencies are being challenged by their own debt burdens. Silver and gold are preparing for that shift. So if you're not already positioned, understand this. When the next phase begins, it will move faster than you think. You won't have time to chase it. This is the moment before the storm. The quiet before silver breaks out into a new reality where triple-digit prices are not a fantasy but a baseline.